Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. We've got a bunch to talk about like we do every day after the markets closed. Wow, there was a lot of red today and a lot of movements, not a lot to the upside. I think the biggest mover to the upside might have been the VIX volatility index. So we're going to get into that. But remember, the most important thing, the reason I'm doing this live stream is what's on your mind. If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. I hope not too many people got burned today holding the bag with the switcheroo in the markets today. It was pretty red. So I'm just going to go ahead and jump right into it. The major indices dropped more than 2% today following its global peers. A lot of other markets that were open outside of the U.S. today also saw a lot of red as investors sold riskier assets after the discovery of a highly mutated variant of COVID-19 in South Africa. The S&P 500 fell 2.3%, the Nasdaq fell 2.2%, and the Dow Jones fell 2.5%. The small cap Russell 2000, well, it underperformed with a 3.7% decline. That has a lot of your smaller stores in it, a lot of smaller retail stores in it, trading down today. Trading also, or the trading action came in on lower volume, which was expected. Today was a shortened trading day with decliners outpacing advancers and new lows outpacing new highs today. Today's reaction and sell-off was linked to FUD around the variant and the resistance to possible current vaccines. It's a possibility. That's a piece of FUD that is out there, and concerns that it could slow down the global recovery effort. Investors may, or many of whom were caught off guard, de-risked first and waited for answers later. All 11 S&P 500 sectors closed in negative territory, 10 of which fell below 1.4%, consumer staples, and 4% energy. The 10-year yield was down 16 basis points to 1.49%. Oil fell 12.3% to $68.80 a barrel. And the CBOE volatility index, the fear gauge, well, it gapped up to finish the session up 54.04, and the price would be then at 28.62. That's a big move towards fear. One more for the FUD gauge, DD, ticker symbol DIDI. Well, China wants DD to remove its listing in the US or delist due to supposed security issues. We don't know what those security issues are that China is stating, and this comes from an article in Bloomberg. Okay, that was a wrap up on the market. Let's check in on Bitcoin because it is at a very critical point. And the last time I checked, before we jumped into the live stream, it was hanging on to this trend line, and it may be slipping below, but we'll have to look and see. Here's that gap up in the VIX today. You can see this mighty hole and where it finished. And if I just was to draw a line here across the screen so we can see when was the VIX this high in the past. Well, the last time it jumped to this point would be September the 20th. Then we would have to go back to May 12th and May 12th, yep, and May 13th. And then we would have to go back to, let's see, what is this date right here? That is March the 4th. And then we've got February 25th. And then the real big, humongous spike on the VIX, that would go all the way back to January 27th to start out the year. So you can see a bit of a downtrend if you look at the 200-day moving average there for the VIX, but this big jump in this big spike today, most of it has to do with the fears of this new COVID variant. You can see that before we go to Bitcoin right quick. Hello, excuse me, pardon me. How's it doing? Glad to see you in the comments there today. Glad you're watching. Appreciate you being here. Appreciate everyone being here. You can see here there were a lot. Pfizer was up today. Zoom Video was up. Peloton was up. We've got Teladoc Health, Chewy, they were all up. Affirm was up. So all of your typical COVID players, they were up today, anticipating, excuse me, got a little frog here in my throat, anticipating potentially a move back to maybe more restrictions, lockdowns, etc. That is the big fear with this new variant that's affecting the market today. All right, let me put in Bitcoin here. I said we were going there. BTC USD on TradingView. TradingView is where I do all the charting that you see here on the show. In all of my videos, there is a link in the description for a free account for TradingView. I find it to be one of the best platforms out there for trading. Now, let me zoom in here on today's red candle for Bitcoin. Again, this is the daily view for Bitcoin. So this big red candle right here for Bitcoin, it got to a high of 59,194, and it got to a low of 53,353. Now, all last week, all this week, I have been saying there is a very important line on the chart for Bitcoin. $54,300. That is the support line you do not want to see Bitcoin break below. Right now, Bitcoin is at 54,269. So it is just below that trend line. That's what we don't want to see, because if Bitcoin falls below that trend line, then there could be quite a bit of pain in the crypto market for Bitcoin. And of course, when Bitcoin goes down, other cryptocurrencies follow. Now, Ethereum, not quite as much. It can outperform Bitcoin in some certain circumstances. But this is where we've got Bitcoin at right now. It is just below this major trend line right here at 54,400, maybe down to 300. Give or take a couple of dollars. So that's about where the trend line is right now. But we don't want to see Bitcoin stay below here. We want to see Bitcoin close out the day above this trend line right here, and that'll give me hope. Hope that it can hold on this trend line. So that's Bitcoin right there. Now, if we look at the candlestick for volume, it is almost at max peak for volume as far as cryptos go. We have to go back here to November 18th for this type of volume, and then we would have to go back to October 21st, and before that we'd have to go back to October 15th. So it's not very often that we get this type of volume trading on Bitcoin. I believe the volume today was 25. Let's see, that would be 25 million for today, where the average is at 14 million. So big jump up there in volume. Now, the RSI for Bitcoin, which typically runs a little on the hotter side, a little on the heavy side, right now it is sitting at a 39.050405. It's moving around there. That is not considered oversold. You have to get to 30 and below for oversold. But like I said, cryptocurrency, especially Bitcoin, it tends to run a little hotter on the RSI. Usually when you get down to below 40 for Bitcoin, then you're getting into the oversold, because Bitcoin can run, if we go back to maybe the second week of October, Bitcoin was up here running in the 75, 76, 78 area all week long for about 2 weeks. So that is not really an oversold area for Bitcoin because it can run hot in that aspect. All right, so that's Bitcoin. Now it's at 54,316. So it is going up during the stream right now, but we want to see it close above that trend line. That's very important. All right, checking in on Ethereum, ETH, USD on TradingView here, and then I use Coinbase as the data source. All right, let's look at Ethereum and how it's performing and where it's at. Obviously, Ethereum is not performing quite that well today. It's actually underperforming Bitcoin. It's down 9.38%. It's at $4,101. Now, it got as low today as $39.14. And for Ethereum, it has got a super strong, right here you can see it. Maybe I'll put a little circle around it to make it a little easier to see. But right now, this area right here, there is price support and there is a trend line support right there at $4,000 for Ethereum. And that is a very strong line for Ethereum to bounce off of like it did today. So right now, Ethereum is slowly going up right now, ever so slowly, which is a good sign. We want to see it get back above its 50-day moving average, which its 50-day moving average right now is also at a price point support line, and that is at $4,200 for Ethereum. Let's see, is anybody buying the dip in cryptos? Actually, yes. I have been buying Bitcoin and Ethereum while it has been moving sideways for this past week. As you can see, looking at this chart, let me put a box around this right here. If I put a box around it, it'll make it a little easier to see. If I draw a box from here and then down and then across and then back up, this box right here has been where I've been adding to Ethereum. And the same box would apply to Bitcoin. I've also been adding on those days whenever they get to what seems to be their lowest point or a lower point. For example, on red days, if they are underneath, well underneath where the day started, then I find that as a buying opportunity. So both Bitcoin and Ethereum I've been adding all week, which would be inside of this box that you see here. So good question. Glad you asked. Yeah, so that's definitely buying the dip on those two. Now, if we get outside of cryptocurrency and we get back into the market, on Wednesday, I shared my thoughts on Deere & Company, which that ticker symbol is DE. Let that load here for you so you can see it on the chart with me. So I shared my my thoughts, my basically my investment thesis for Deere. You can see it is in this symmetrical triangle, right? On earnings, it popped out above this, but this was a false breakout because it did not get nearly as high as it should have on a breakout. And then it fell back right into this box. And then today, it is inside this symmetrical triangle still. And I find that to be perfectly okay and not a bad. Let me just fix this line here. So you can see that it can still go out several more days. I mean, it could go all the way to the 7th of December before breaking out of this symmetrical triangle. Now, I brought them up and I talked about their earnings, and it looked pretty good. They missed on the top line, but they beat on EPS. But what investors really saw was the backlog, the future growth for the company. Now, the only reason I'm bringing it up today is because today Oppenheimer said that Deere will be stronger for longer, and they reiterated their outperform rating for Deere & Company. So I just wanted to point that out. They did come out, Oppenheimer, and say that Deere is going to be strong for the long term. And they were really looking at 2022 and 2023 as two strong years of growth for Deere and Company. Now, it's not going to be a big mover. It's not going to have 5% runs here or there. It's going to be a 1-2% steady and up and to the right type of mover. So it's going to move slow. All right, electric vehicles. We've been looking at them every day for 2 weeks now. So let me just plug them in. First, we'll start with Lucid, LCID. Now, Lucid fell today from its pattern, and all week, including on Wednesday, I said that Lucid would fall from this pattern. I thought that the electric vehicle sector as a whole had gotten overextended. There were a lot of gains made with electric vehicles, electric charging stations. They just ran, solar included. They ran for the month of October and parts of November. So they were overextended. They were due for a pullback. Now, while I did say that Lucid would come out of this point right here and drop, I must admit, though, the reason for Lucid dropping today is not the same reason that I thought Lucid would drop. So I have to admit that. While I may be right on Lucid dropping, I was wrong on the reason why it dropped. So I just got to be fair and be honest and put that out there. Most of its falling today had to do with the COVID variant and people being nervous and institutions taking their profits and getting out of higher risk stocks like Lucid. All right, next up is Tesla, TSLA. They also fell today. Load here on the screen here so you can see that. Now, Tesla, even though it fell today, it is still in a very bullish structure. We can almost start to get a new pattern maybe being formed here. And let me adjust these lines right here. So if we do this right here, now this one candlestick right here, I'm leaving the wick out of it just because it's kind of an anomaly, because I've got 1, 2, and 3 touch points here, and that's what you want. You want 3 or more points of contact when you are making these lines on the chart. So now if I do that, and let me just extend this one out a little bit, we can start to see a pattern potentially starting to form here for Tesla. Now, this pattern is in a bit of a downtrend. If for some reason we get a few more days where Tesla is moving sideways up in this area right here where it's at right now, then it's possible that this bottom line could actually be moved to a different direction. And it's quite frankly, it's almost to that point where we place it here, we move it forward, and then if we go up like this, we can actually get 3 points of contact. One where it started, one here on the 24th, and then today's touch point. So looking at that, we're starting to form a symmetrical triangle. And usually when we do form these symmetrical triangles, we get a breakout to the upside. That's quite literally what could be forming for Tesla. Now, since the whole EV market is overextended, though, this may be one of those symmetrical triangles where it actually breaks down instead of going up. Because the spread on that is about 90% of the time it's going to break up. And then you have 10% of the time where it's going to break down. So this could be one of those 10% times where it's going to break down. Just a possibility. And remember, the stock market, crypto, it's all about probability. So we assign a probability to a certain outcome. And that's how we come up with our technical analysis as one data point in that potential outcome. All right, let's look at Rivian here, RIVN. Rivian also fell, but it found good support at the $100 a share price point that we've been talking about since their IPO. Now, since their IPO, I have mentioned the $100 price point for many days in a row now. And talking about that is a good area of support for Rivian. Now, it got to a low, I believe, of $106.14 today. It is about, let's just say, I don't know, about 65, 70 cents above that point right now. So I find $100 a share to be a pretty good support level for Rivian right now, although we don't have a lot of history to go off of. So that support level, while it may look good right now, like with any stock on the market, we always have to adjust our thesis. We have to adjust our trading strategies. Right now, it's looking like $100 is a strong support level for Rivian. But since we don't have much data to go on, that could be a false support line or maybe just a temporary support line. But right now, that is support for Rivian. All right, let me pull the S&P 500 up. SPX is what I use in TradingView when I'm looking at the S&P 500. Yeah, risk and reward. That is very, very important. Right now, the market is looking a little more risky, especially the EV market because of how high it's run up. And if we look at the S&P 500, this is a beautiful chart. It is up and to the right. This is what you would love to see for any stock on the market. Now, of course, we did have this bout and this dip here throughout September, and it bottomed in October. And then we had a nice October rally into November. But then we stalled. We got an all-time high. We stalled for a week. We got an all-time high. And now we have fallen below the 21-day moving average. That happened back here in the September fall. But today's fall was a pretty big drop. A 2.27% fall in the S&P 500 today. That is a bigger fall than normal for the entire index like this. Now, what will be important and very key for the indice is this 50-day moving average, which is the blue line on the stock chart. If you look, all this year, the 50-day moving average acted as support the majority of the time. Whenever the stock not stock, but indice would fall down, it would bounce off that 50-day moving average and carry on with the rally. Until, of course, we got till the month of September where it fell below that. But then once it got back above, it continued its rally. This is what we have to watch very carefully. If it falls on Monday and Tuesday and Wednesday of next week, we are going to get very close to the 50-day moving average. Right now, the 50-day moving average sits at 45.27, and it is at 45.94 right now. So just about 40 points or so. And then we hit that 50-day moving average. And this is a simple moving average. So we have to ask ourselves, when it hits that 50-day moving average, is it going below it? If it does, then that is a negative or bearish signal. If it bounces off of the 50-day moving average, then that's a positive or bearish signal. So we'll have to keep an eye on that very closely. But the big story driving the stock market today is the emergence of a new strain of COVID-19 in South Africa. It's understandable, and it is definitely fueling concerns about tighter economic and travel restrictions. Likely adding to the volatility today is the shortened trading day and typical lower trading volume that we have on this short day. When you have a lower amount of volume, it takes less movement in the market to make bigger moves. So if you're trading, let's say, with a volume of 100,000 and you have 100 participants, then the stock can move maybe 100 points in either direction. But if you're trading with the same 100 participants, but volume doubles to 200,000, then those 100 participants may only be able to move the market by 50 points either way. So the higher the volume gets, the slower the market can move. And I hope I'm explaining this carefully enough for you to understand that on lower volume days, it doesn't take much to move the market. On higher volume days, it takes a lot more to move the market. Okay? Because think on those lower volume days, you could have more people selling, and that's going to affect how quickly the price comes down. But if it was a higher volume day with the same amount of people selling, then you would have added people buying to have an equilibrium, right? So on a shortened trading day like today, where the market closed at 1 p.m. Eastern, volume was lower. So it's to be expected that there would be bigger moves made today, which leads to a greater swing in the market. Among the biggest losers today are travel-related stocks like cruise lines, seeing the biggest drops, followed by airlines and then hotels and casinos. Because if we have to go right back to being restricted in our movements, or God forbid, having to be locked down again, then no one's going to travel. So it makes sense that airlines are affected, cruise ships are affected, hotels are affected. But on the other hand, vaccine stocks are up sharply, except for J&J. They were not up today. Stay-at-home plays are also on the rise. Look at Zoom, how well that did today. Peloton, it was up today. So those stay-at-home plays were rising due to the fear that maybe we'll have to have more restrictions. Now, first, investors need to take a deep breath. Do it with me. Take a deep breath. In and out. We do not know a lot of information at this point. The World Health Organization is holding an emergency meeting today to discuss the variant. There are 3 classifications you can assign to the variant: variant of interest, variant of concern, or variant of high consequences. It will be notable which one they select. Our guess is that it would be more of a concern for now. Another aspect of the story is that South Africa is a small sample size, and the country has a low fully vaccinated rate of about 24% based off of New York Times data. So we do not know, or we do not want to draw any conclusions or too many conclusions on the effectiveness of the vaccines against this new variant. So when you see comments like the vaccine doesn't work for the new variant, I would take that as more FUD, fear, uncertainty, and doubt, because we just don't know yet. So that's why I say take a deep breath. Now, on the flip side of that, South Africa is among the higher vaccinated countries in Africa itself. So the potential for more spread in the region is a concern. But I'm not saying it's an end all be all, just a concern. Just like when we are mapping out stocks on a data chart, or we are building an investment thesis for a stock, we use many data points to come to that conclusion. Not just technical analysis, but technical analysis is part of it. That is one data point that we use. We can use an investor deck, an investor presentation. We can use different news sources. So we have many different points at which we get our data from to come up with our investment thesis. The same is applied here. Also, it was encouraging to hear Moderna's CEO on CNBC today saying that the company could change the vaccines within 60 days if needed. However, he was unsure how long the regulatory process would take. mRNA technology also allows these vaccine makers to change the vaccines quickly, but they still must get approval all over again. Bottom line, headlines about COVID variants are certainly depressing. The world is approaching the 2-year mark in terms of dealing with this pandemic, and people rightly question if we will ever get past this. However, we really need to wait for more information on this new variant. Recall a few months ago, there were the lambda, maybe, am I pronouncing that right? And mu variants, but they fizzled out. Also, the world now, or the world is now, much better prepared with advances in vaccines and with treatments. So take a deep breath. All right. I know I don't usually go off topic of stocks and the markets, but I just had a feeling that I should share my thoughts and just let everyone know to take a deep breath. The stock market does not always go up. Stocks are not always green. As investors and traders, we know this. But outside of investing and trading, we also need to take the world one step at a time. Take a deep breath, be calm, gather your data sources, gather your data. All right. Next up is a stock that I think is not on too many people's radar. And I don't normally talk too heavily about value stocks, but this one definitely would apply as a value stock. And that's Allison Transmission. Ticker symbol is ALSN. Let's pull this up on the chart here, and then we're going to talk about it just a little bit. Right now, they're on a discount. You can see this plunge, and I will put a line here to make it even more noticeable. But it was in this downtrend right here from May 7th all the way until it bottomed on October 27th. Now the company is in a rally. Now, of course, today it dropped it 2.5%, but it's been moving up. And why is that? Well, I think that it is a stock that most people are missing out on. If we look at volume data here, they get about 900 million. Their average is 1.1 million right now. That's a good chunk, right? It's a good net on volume. So, Allison Transmission. I'll just say Allison for short right now. But I believe Allison should be looked at as a value play. Allison makes vehicle propulsion systems for commercial and defense vehicles. It's the largest global manufacturer of medium and heavy duty fully automatic transmissions, and it's a leader in electrified propulsion systems. Allison excuse me, Allison products are used in a wide variety of applications, including on-highway trucks, distribution, refuel, construction, fire and emergency, buses like school transit and coaches, motorhomes, off-highway vehicles, and equipment like energy, mining, and construction applications, and defense vehicles, tactical, wheeled, and tracked. Allison is seeing robust demand, fueled by the ongoing recovery in global economic activity. However, it is being impacted by supply constraints not only internally, but its customers are also having issues, which range from labor shortages, not economic, but electronic component shortages, and logistics disruptions like from air and ocean freight and port delays, as well as the limited availability of raw materials. Now, with all these negatives, you must be saying, Adam, why are you even talking about this? Well, Allison expects these issues to continue into 2022. However, on its Q3 call, management did say it expects better conditions in 2022, next year. Bottom line, I wanted to flag Allison as a name to keep on your radar. It's certainly facing supply chain issues. However, I view it as a lesser known manufacturer or infrastructure play, which should act as a tailwind in 2022 and 2023. Also, the stock has pulled back and it's down a good bit. I believe it's about 21% here on that decline that I showed you from its highs back in May. So, hopefully, a good chunk of any bad news is already priced in. Management seems to think so too, as it has been aggressively buying back shares. That helps in rising share price. When a company does a buyback or a share buyback program. During Q3 alone, Allison repurchased $100 million in shares, representing over 2% of outstanding shares. In fact, Allison has repurchased over 7% of its outstanding shares in 2021 through the first 3 quarters. As a result, Allison sports a robust 7.8% buyback yield. When you add the 2% dividend, that comes out to a 9.8% shareholder yield, good enough for a spot in anyone's top 10 list. As always, use a stop loss limit to prevent any losses as the market becomes emotional and overreacts to negative news. Because remember, the market always overreacts. And that's where you get the whole phrase buy the dip. All right, got a comment here. I bought Atom at $27. Let me go ahead and pull that up. All right, let it load here. 20, you got in at 27. All right, let's see here. We have got on the chart, this is 2021, so it's been rather flat, but there is a bit of an emerging here uptrend. Look at this. We place the lines right there. We go back here to May 11th. It is in an uptrend, although it's had its peaks and valleys along the way. Let's go ahead and clone this line because I want to get the exact same angles. All right, work with me here. There we go. All right, let's see. Where would be a good cap off? Now, remember, when you're placing trend lines, you want to get as many points of contact as possible. There may be, at times, places where you have these peaks or maybe even valleys that do pop out of the trading channel. But overall, this trading channel that you see here, it now captures the majority of the move. And then we have the anomalies where it pops out here. Now, this is interesting. It popped out and made this big run right here after earnings. All right, that vertical line there, that is when their earnings came out. And it sold off on the earning news, but then it rallied to the top of the trading channel. It stalled for a day, and then it broke above it, and now it's come back down. Now, today's candle is still above this trading channel, although the wick did dip below it. And it looks like it's sitting right on its 200-day moving average. So I would like to see a nice bounce off of this place. Now, overall market conditions can affect the individual stock. So if over the weekend we continue to get negative news, maybe about the coronavirus, who knows, then the markets on Monday could continue to transition from an opening play, reopening play, to a stay-at-home play. And individual stocks can get hurt by that. But it's interesting that it is sitting right on its 200-day moving average, and the candle itself stayed within this trading channel. So you got in at 27, and it's at 23.14 right now. Obviously, if you sell right now, you're going to sell at a loss. We don't want to sell at a loss. Is that right, Carlos? We want to sell for a profit, unless we're holding long term, and then of course we'll sell for a bigger profit, or we'll hold those stocks and use those stocks as leverage if we want to buy a house or something, or pass it down to our children or something of that nature. Generational wealth. But right now, I do like the setup. I do like that the wick of the candle did come down below the 200-day moving average. It came below the trend line support, but it ended above both. That is a positive sign, especially on a negative day in the market overall. So this is a positive sign. I would really like to see on Monday, I would really like to see one of two things. Either a flat day where it just moves sideways, or a green day where it bounces off that 200-day moving average. Those are two things that I would really like to see. I do not want to see it on Monday go below this. So, Carlos, did you set a stop loss for your position when you got in at $27? That's a question I'd like to have an answer to. If you did set a stop loss, at what price did you set the stop loss for? That would be a question that would help here. All right, let me look over here on the right side for financials. They have missed their past 4 earnings reports. Their profit margin has taken a pretty big hit. They are up 43% year to date. The technicals say that it's a sell right now. Let's see here. Okay, so it's building components for semiconductors. It has a proprietary process and technologies for the semiconductor industry. It developed mirrors, silicone technology, which increases performance and power efficiency in semiconductor transistors. Okay, that's an interesting company for sure. I'm going to just pull up their website here, just get a quick overview. All right, so I gave you a technical picture on what the stock is looking like. It looks like positive. It looks positive. I would really like to see a bounce. That would be number 1. Or number 2, go sideways since it is sitting right on support right now. Okay. All right. Okay, so if I go and look at the financials a little deeper on them. All right, so missing the past 4 earnings. Last quarter, they came in at a 19-cent loss per share. The estimate was a 12-cent loss. They came in with no revenue, net income, a loss of $4.2 million, no profit margin. Same thing with the quarter before. Quarter before that, they did bring in 400,000. Okay. We look at the balance sheet here. They've got a 20% debt to asset ratio. And the quarter before that, in Q2 this year, they had a 5.4%. So they jumped up with some more liabilities. in their last quarter. Now, financing has dropped off as we've moved through the past 4 quarters. Okay, so it's burning cash. It has no revenue net yet. Okay. Well, quick fundamental look on the company. No revenue, so this is a new, must be a growth type of company, which they can take off quickly. They can take off slow. There's no telling. It is in an ascending trading channel, meaning it is moving up. It is going up, which is good. You want to see that. Right now, technically, it is sitting on its 200-day moving average. It's sitting on its support line. I would like to see it bounce, or at the very least, move sideways, or maybe inch up just a few points there. That would be positive for Monday. So that's my thoughts there on ticker symbol ATOM. And if you got a stop loss, I would really like to know, Carlos, what that stop loss was set at. Right now, it looks like that support line is right at about $22.84, give or take a few pennies. That seems to be where it's at right at this moment. And the 200-day moving average, it's at $22.92 right now. All right. So there you go on that. And remember, if you have a question, just leave the ticker symbol in your question in the comments. I'd be happy to look over it for you and with you. All right, I'm going to move on to another company that is doing pretty well, and that's VMWare, and the ticker symbol is VMW. That's the ticker there. You can see this big gap down right here when they paid out on their dividend. That's always interesting to see. Let me bring this in for the full year. So this thing has just been all over the place for the past year. And if we look at earnings, they've beat every earnings for the past 4 earnings. And if we look at year to date, they are down 13% year to date. So why am I even bringing this company that's been a very poor performer and has underperformed the market this year? Well, VMW, that's VMware. I'll call it VMW so we get used to the ticker symbol. VMW, it ticked slightly higher after its Q3 earnings report after market on Tuesday, or after hours on Tuesday, and revised, updated its initial dip this morning to continue its move higher today. VMW keeps its momentum after Q3 earnings, and it is much needed as shares have plummeted 30% from 1-year highs in late October. The stock is currently down 14% on the year. One of the main issues plaguing the data center server and operating system visualization, get that word out, type of company has been a more pronounced slowdown than expected in recent quarters in subscription and software as a service, SaaS, revenue growth. For example, in Q1, this segment saw a 29% year-over-year growth, only to slow to 23% in Q2, while also falling short of expectations. Although subscription growth was just 21% year-over-year in Q3, and deceleration may be finding its floor as VMW expects about 22% growth in Q4, which it reports in January. VMW's growth strategy is heavily dependent on the company transitioning from its legacy license model to its premier software to primarily offering cloud-based data center service visualizations. The primary reason businesses would want to transition to data center visualization is the reduction of numerous servers, which drastically cuts down on cost. And for this reason, I think VMW is worth keeping on the radar. Despite its okay Q3 earnings results, in Q3, VMW posted solid adjusted EPS upside of 18 cents, the largest beat since Q3 of 2020. Total revenue also returned to double-digit growth of 11.3% year over year to $3.19 billion. Subscription and software as a service revenue comprise about a quarter of overall sales, with services and license revenue making up the other 75%. Again, highlighting that subscription revenue isn't growing as quickly as investors may want to see. Its percentage of total revenue has stayed virtually unchanged throughout the year. A contributing factor is its stagnation, is that VMW gives customers flexibility in the pace at which they shift to the cloud. For example, VMW still offers a set of products where the customer can choose a term license or a subscription, as well as products that they can only purchase through a license. The good news is that VMW is continually working on shifting license only products to be unable in the cloud or unusable in the cloud. But this process can take years. VMW expects subscription and software as a service revenues to start to make up closer to a third of total revenue in fiscal year 23, and guided fiscal year 23 total revenue growth in the high single digits. Overall, VMW's subscription and software as a service revenue may not be progressing at the pace investors want to see, especially as businesses accelerate their adoption of cloud-based services. VMW still offers many of its products in a licensed form factor, including cloud management, which could be hindering its subscription growth rate. However, as VMW works on making available its license-based offerings as subscription and software as a service-based offerings, its slowdown may start to have a turn into a nice acceleration, which makes VMW worth keeping on the radar. All right. So it's a company that could have the potential to kick it into gear if it can move swiftly in getting rid of its license-based revenue or services and move those customers to a subscription-based model. Because when you have customers on a subscription-based model, that's revenue you can count of, because that's recurring revenue that's coming in every month, every quarter, every year. So that's why I have it on your radar. A company that recently went through a fundamental change like VMware is going through right now is Rackspace. in Rackspace has really turned their business around by adapting their business model for a subscription-based world. Okay. Not a very fancy or fun stock to look at, but it's got potential. All right. Here's some catalysts coming up for this week on the earnings front. We have Salesforce. We have Zscaler, CrowdStrike, Five Below, Snowflake, Splunk, and DocuSign. They all report next week. Now, out of the group of them, Salesforce has been making some pretty good waves. Zscaler has also, so has CrowdStrike, especially with securing data. Five Below, on the other hand, may take a hit, or it may pop and then drop, like we saw with some retailers this week and last. And then we got Snowflake, which is all about the cloud. That one could be interesting. And then we have Splunk, who just doesn't seem to be getting it. And then DocuSign, well, I'm pretty sure all of us agree DocuSign is probably going to take a hit this quarter with all the reopening that occurred during this quarter. So I will go into much greater detail on my Catalyst Watch video that drops every Sunday evening. It talks about what I'm watching, why I'm watching, and what I'm watching for the week ahead. It is the perfect video to go along with setting up your week, with setting up what investments are you going to do, what trades could you make. This is the most important video I do all week. So I hope to see you all there. Sunday evening is when it comes out. The past several that I've done them as a live stream around 6 p.m. or so Eastern. So definitely watch for that video. All right. So that's everything that I wanted to talk about today. It was a short week in a short day today. So a bit of a short video. But again, if you do have some questions, now is the perfect time to ask them. I'm just going to hop over here for a few minutes and look at some of the winners for today and some of the losers for today. And you can ask your questions and we can talk about it. Give me just a quick second here. All right. Thank you. And excuse me for that. All right. Let's see. We've got the VIX. Yeah, that made a big move today. We already talked about BioNTech. They made a move, 14%. We talked about Pfizer making a move of 6%. Zoom making a move of 5.7%. Peloton, 5.6%. Logitech, 5.3%. You know, that's the company that makes keyboards and mouses and stuff as accessories. And then we got Teladoc Health up here at 3.4% today. Chewy, 3.4%. Affirm, 3.1% today. DocuSign, 2.5% today. So you can see a very clear pattern here on what was moving today. Twilio was up 2.2%. Zynga, which is video games, 2%. Snowflake, getting ready for earnings next week, up 2%. DoorDash was up 1.6%. And now we get into smaller ones. Winnebago, good to see them move, up 1.5%. They make RVs. All right, let's see who some of the losers were this week. All right, so we got, what do we have at the top here? We got Royal Caribbean, we talked about the cruisers. They were hit today pretty good. Royal Caribbean was down 13.2%. Let's see here. Carnival, another cruise line, 10.9% down. Got Peabody Energy down 9.9 because oil dropped today. United Airlines was down 9.7. We talked about that earlier about how travel was hit and airlines were hit. Expedia down 9.4. Crypto or Bitcoin or what's the word I'm looking for? Blockchain. That's it. Blockchain and mining companies were definitely hit today with Bitcoin going down a bit. Bitfarms was down 9% today. American Airlines down 8.7%. Shiba Inu dropping 8.7%. All right, so there we talked about what the groups were for losers today. Now these are your individual companies that were losers today. Delta Air, they were down 8.4. Bitcoin here at 8.1. Spirit Airlines 7.9. So yeah, we know what was down today. Bit Digital was down 7. Booking Holdings 7.2. So yeah, we talked about this at the beginning. We got the airlines, the cruisers, the hotels, all taking a hit today. All right, well, if there's no questions for today, then I'll go ahead and wrap the stream up. I want to thank you for joining me. I know this was a short week and also a short day today in trading. But do remember, if you found this video at all helpful, informative, actionable, then click the like button, number one. Number two, share this video because that is very powerful. And number three, click the first link in the description to become a Patreon member today. Patreon members get our weekly trade setups where we lay out our entry point, our exit point, and a little synopsis on what the trade is all about. And you also get a chart that kind of lays it all out as well. So that is a benefit for Patreon members. Also, we are working on a couple of good other benefits for Patreon members. Buy sell signals will also be included by the end of this quarter for Patreon members. So make sure to click the first link in the description for that. There's also a ton of information we give out during the week. For example, when the deal got made in the House and was moved to the Senate, your infrastructure bill, solar type companies, alternative energy companies, they all went off to the races, and we shared that with Patreon members. Some ETFs and individual stocks in those different groups that Patreon members could invest in or trade around. It was a really good setup. Okay, what's your favorite crypto mining stock? Hut 8 Mining. I don't even have to think about it. Hut 8 Mining is one of my favorites. They are out of Texas. The whole battle with crypto in being, whether it's clean or dirty, Hut 8 Mining is 100% renewable. So that's my favorite mining, crypto mining stock, Hut 8 Mining. Their ticker symbol is HUT, H-U-T. And like all the other blockchain, they got hit today. But I'll pull up HUT here on the chart so you can see what it's looked like. I've got a long position in HUT 8 Mining, and I have a trading position for HUT 8 Mining. There we go. All right, so you can see it moves right along with Bitcoin. But the thing to point out about Hut 8 mining is back when Bitcoin was reaching all-time highs back in February, if you look on the chart here, my head may be a bit in the way, but let me circle it here. Look at the amount of volume right here for Hut 8 mining when it hit its all-time high back in February, March. Look at the volume there, super low. And then we get over to Bitcoin hitting its all-time high recently, and look at the amount of volume. Look at this. Volume has been in a steady uptrend since July. See that? So there are a lot of people finding Hut 8 mining and these other mining crypto companies and swing trading them in different ways, investing in them long term. So Hut 8, it's my favorite. I love what they do. I love their mission statement, what they stand for. Let's see if I can get their website pulled up here too, so you can hut8mining.com. You can look at their investor page as well. Blazing the trail for digital assets. There. I don't know why that happened. All right, there we are. We're back now. All right. Okay. You are welcome. I'm glad I could help with that. All right, I'm gonna go ahead and wrap the stream up here. That's all I wanted to talk about today with the different companies, and of course the fear that's going on. If you are watching the replay of this, leave your question and ticker symbol in the comments, and we'll go over it live during the show on Monday. So I'll be back here Monday, 5 p.m. Eastern, for another after hours show. Also, Sunday, Catalyst Watch video comes out Sunday evening. Most important video I do all week. It is definitely a video worth a watch. I think I already mentioned that, but just to mention that again. And I guess I'll wrap it up here. You guys and gals have a wonderful weekend, and I'll see you in the next video.